Okay guys, this video is to show you the importance of some concept related to market profile that is very important and which I daily use to set up my strategies, to calculate my entry levels, and to understand the context of the market that we have in this moment. And I'm talking about the opening location. Opening location is where the market opens in compare with the previous day, and it's important, the open location, because give you an estimation of what to expect for the day and the market state of balance, and what are the risk and opportunities related to the day you expect you are expecting to see, the potential trade risk, opportunity, and also range development if we can apply it. So to be short, we can have three type of open, and one of that is open within the value of the previous day, outside the value of the previous day but within the range, and open outside the range. And in every case we can have two kind of behavior. One is acceptance or rejection. Acceptance is when we have overlapping type U signify value or acceptance. We are accepting the new range we are trading in. Rejection, when market drives out during the first hour of trade and does not build double type U's to signify acceptance within value. So this is very important to understand. Open within the value with accept. So for this kind of three type of opening, we will see what does it means to open within value with acceptance and rejection, and the same for the two other kind of opening type. So open within value, we have opening within value when we open inside the previous day value area, that is the 70% of where the market traded the previous day. So opening within value and having acceptance, so building overlapping type U's, signify that market is in balance and the trade and risk opportunities are both relatively low because the market is very quiet. There is not so much activity, and the value that we oceaned the previous day is accepted by the market participant. And the day's range usually will be contained with the previous day's range or overlap one of the previous day's extreme slightly to one side. Okay, this is very important. And another kind of opening within value area, but more powerful and more interesting, is when we have rejection. So the market opens within the previous day's value area and drive out during the first half hour of trade, completely beyond the limits of the previous day range. Then both risk and opportunity are high. Range estimation is unlimited in the direction of initiative drive. We have here one great example of what I'm talking about. And as you can see, the market open. You can see here the sign of the open in blue within the previous day's range value area, and so also the range, and have a completed rejection of the prices. Okay, so we have an open drive kind of open. We will see it in another video, and the market after that try to balance on that zone. So this is to reassume we have an opening within the range, but with a rejection of the prices, something happened and the market balance above the previous day's range. Okay, another kind of opening type and location is outside the value but within range. And as we saw for the opening in value, we can have two kind of opening type with acceptance or rejection. Okay, opening outside of value but within range and accepting the prices, it means that the market is slightly out of balance and will generally produce a range that is similar to the previous day but overlapping to one side. Okay, and for understand what the market, how a market can move and where are the targets of the day, we can use the method for range estimation that we will see in another video. If the market open outside of value but within range with rejection, we have subsequently breakouts beyond the extreme of the previous day's range, and it means that market is coming out of balance and range potential is still unlimited in the direction of breakout. Okay, so the last kind of opening location is open outside the range. Opening outside the range with acceptance, it means that market is out of balance, and this is very important. As long as price does not return to the previous day's range, the market has accepted. Okay, the market has accepted the breakout. So market will continue to drive in the direction of the breakout, and the range potential is unlimited. Or market will begin to ocean back and forth at the new price level, same but less conviction. If we have an open location outside the range with rejection, it means that the prices are rejected back into the range. Potential for a dynamic price moving direction opposite to the opening is very, very strong. But this range potential is still unlimited for the market open at out of balance and could move significantly in the opposite direction. So thank you guys for watching this video and see you.